there's no denying the fact that the crypto community is going through a bit of a tough time at the moment. Billions have been wiped off the market in recent months, but it might be set to get worse before it gets better if prominent voices within the sector are to be believed. Today, we are discussing the idea that one coin could be set to wreck the crypto community for good. Stay with us. Let's get straight into it then. What's going on? It's no secret that the crypto community have had to endure a nightmare 2022 with the collapse of Terra Luna, wiping billions off the market seemingly overnight. But some commentators have suggested that it could be about to get worse. Hilary Allen, a financial expert over at American University, believes that one thing could be about to bring the whole industry down, saying, "Tether is really the lifeblood of the crypto ecosystem. If it imploded, then the entire facade falls down." Just like Terra was, Tether is a stablecoin, which aims to insulate itself from extreme market volatility by pegging itself to the price of a traditional fiat currency, usually the dollar. Tether also issues tokens pegged to the euro and yuan, as well as gold. Given its status as the third largest cryptocurrency, if Tether was to fail, it would have massive repercussions for the whole industry, something which experts like Allen have suggested could be just around the corner. With a market cap of almost 83 billion US dollars, Tether is a behemoth of the industry, but it's in trouble. Last year, it was fined $18.5 million for lying about its financials, and investors have been quick to get rid of it of late given the current crypto winter we're experiencing. The company was forced to pay out as people cashed out, but the executives' claims that they weathered the storm flawlessly might be a little wide of the mark. Do you hold any Tether? What else do we know? Let's see. Well, it seems that they just survived by the skin of their teeth, but experts have suggested they might not be out of the water. All it would take is another mass exodus, and the coin could be finished for good. If this was to happen, the shockwaves would undoubtedly be felt throughout an already faltering industry, and it could potentially be the straw that broke the camel's back. Some have suggested that in recent weeks, we have moved from a crypto winter into a more Siberian-style onslaught of polar-like conditions, which could be around for the foreseeable future. Crypto has been locked in a bear market for the entirety of 2022, prompting investors to pray to the bull gods everywhere. However, it's not just the crypto market. Last month, the US central bank raised the interest rate by 75 points, which again caused a huge crypto sell-off as investors went into panic mode. Fears of a global recession sunk crypto yet again, with Bitcoin, the world's leading cryptocurrency, falling to $17,601 at one point. When you compare this to May's high of over $36,000, Bitcoin has lost more than half of its value in just 1 month. Last month's low represents almost 3/4 of its value depreciating since its all-time high of $69,900 just last November. Bitcoin has seen pretty much all of its gains wiped out recently, with the latest dip representing an almost 2-year low. Do you guys think the market will recover? Next up, what else do we know about this crypto winter? The term refers to any time we see a sustained period of securities prices falling, of which there have been 3 big ones before this. However, the current crypto winter we're in has been widely acknowledged to be the worst one yet, given the reliance on blockchain we have moved towards. And one expert, Irfan Ahmad of State Street Digital, has suggested this is the first time Bitcoin and other cryptocurrencies have gone through such an inflationary environment. He went on to reveal how the current situation is so bad that big players in the crypto game aren't using the term crypto winter anymore, but are referring to it as a polar vortex. This will give you some idea of how badly the experts view this situation, but he does think the big boys will probably survive, saying, "But as far as an asset class is concerned, we think crypto is here to stay. There is going to be an evolution of the players and the protocols in the market. Whatever happens, we could see the death of many coins over the coming months, as investors rush to take equity out of a struggling market, and coupled with the worst inflation rate rise in the US in more than 40 years, this bear run could be here for months and months to come yet. What have you guys made of all this? Let us know below. So what does all this mean for the regular Joe? Stay tuned to find out. Well, it's not good. Many amateur investors have faced financial ruin this year, as some plowed life savings into an industry that seemed to be flourishing at the back end of last year. Earlier in the year, many have been transfixed by the bull run the market was in the midst of, deciding to invest in coins such as Dogecoin and others. People saw it as a way to finally achieve financial freedom, but then disaster struck. struck. After initially crashing back in June 2021, the market flexed again and recovered, with Bitcoin rallying to an all-time high in November. But since then, it has arguably turned into a complete disaster. People saw their initial investments, which at one point had skyrocketed, almost completely wiped out, with record numbers of people seeking help for depression and substance abuse in the wake of the crash. Castle Craig, a treatment center in Scotland, which treats patients for cryptocurrency addiction, one of the only centers in the world that offers the service, has seen plenty of punters through the door this year, and one man, known simply as Roy, has spoken of how, at one point, his portfolio was worth more than $500,000. It now stands at £300. He said, "It's heartbreaking. I hate myself for the fact I didn't take it out, and this story is all too common, sadly." What do you guys think of all this? Next up, we're talking 3AC. Stick around. The founders of Three Arrows Capital, the failed crypto hedge fund, are apparently on the run from authorities and creditors, ahead of a liquidation hearing set to have gone ahead earlier this week. Zhu Su and Kyle Davies, the founder of 3AC, are reportedly nowhere to be found and allegedly have failed to begin cooperating in the liquidation process. Of course, the pair did not respond for comment as reporters flocked on the story. The firm was managing around $10 billion worth of assets as recently as March this year, but following the crypto crash, they filed for bankruptcy earlier this month. The company was instructed by a court in the British Virgin Islands to liquidate in order to pay off debts, with lenders furious at the prospect of not getting their capital back. Not much is known about what is left of the company, as advisory firm Teneo moves in to assess the damage. The founders did participate in a Zoom call last week to discuss the steps to preserve their assets, but it was all conducted through counsel and neither of them actually spoke. They didn't even turn on their cameras, to be fair, so no one actually knows if they were in attendance or not. However, their lawyers have said that their clients, who previously worked at Credit Suisse, intended to cooperate. And of course, we all know lawyers always tell the truth, right? Where do you think these guys are? Let us know below. And finally, more bad news. Stay with us. In what appears to be another terrible piece of crypto news, lender Celsius Network has announced they have filed for bankruptcy. The polar vortex we are now experiencing has meant that crypto lending has somewhat dried up as of late, which saw Celsius pause withdrawals and transfers last month. Securities regulators in a number of states in the US immediately stepped in to investigate the company's decision. When the news dropped that the lender was filing for Chapter 11, members of the special committee of the board of directors said today's filing follows the difficult but necessary decision by Celsius last month to pause withdrawals, swaps, and transfers on its platform to stabilize its business and protect its customers. They then suggested that they paused activities so that investors who saw it coming essentially could not withdraw their own funds, which should be a crime in itself from our point of view. The company has listed its estimated assets as somewhere between $1 billion and $10 billion, suggesting it had filed so that it could carry on normal operations. Given all of this mayhem as of late, do you think the crypto market should be regulated? Give us your thoughts in the comments below. As usual, thanks for stopping by today, and remember to swing by again next time when we will be discussing some more fun bits and pieces. And why not do us a favor by sharing today's video with any crypto heads you might know of. Bye guys!